my friends, I am Rocky Outcrop. This is FOMO-free, greed-free technical analysis for Ethereum and Bitcoin, and Ethereum and Bitcoin versus each other, as well as the dollar prices. Thank you so much for joining me. In today's episode, I'm going to make a really quite simple point, and it might benefit you quite a bit when it comes to looking at this current uptrend with regards to the highs and lows of it and being able to swing trade in amongst it all. Okay, so let's just start off here, and then I'll do this on Bitcoin, and then I'll jump over to Ethereum and contrast the prices against it so that we get an idea of where both of those things are going, and it helps with making your decisions in the market. Okay, so I'm Rocky Outcrop. This is 100% quality technical analysis. Thumbs up, like the video, all that stuff. Thank you for joining me. Let's dive on into the charts and take a look. Now I have the 24-hour Bitcoin to US dollar Coinbase chart open behind me. As you can see, current price is 13,220, and we're actually putting in highs right now. If the body were to close, just where we are just now, then we'd be higher closing in the highs than any of the previous few days. That's quite interesting. And if I want to zoom right on into this in the finer detail, then we can see that the RSI isn't quite as high as it was over the last couple of days. So during this episode, as well as making the grander point I want to make using the daily and weekly timeframes to do so, I'll also drop down to the 4 hours and check out how this divergence is showing up just there, if there is any just now, if we can see any. But for now, the main point, the main thrust of what I'm wanting to get at is we've got a couple of things happening at once here. Either we push on past this zone where we are right this minute and at this price point and go up towards above this, into this area up here, above the parallel channel, or we find ourselves being resisted by the parallel channel and moving towards the downside. Now that's a sort of the A and B scenarios. Now, if we were to do A, there's a chance that we're actually able to avoid having bearish divergence, move on up, get excited about things, of course, because of this incredible parabolic movement at that point that should be happening. And if we do B, then it kind of comes to the question of when and how we do B. Because if we do B right away from where we are right now, then of course there is a fairly distinct chance of having bearish divergence there show up. And then at that point, the question becomes for sort of the C and D movements. If B happens, the question becomes, will we find support in these areas that we've identified previously, or go on down to these other areas down below? So, will you have C or D happen? And then, of course, the question there afterwards is, if you get A, do you get the prices then turning around from A without divergence and just coming in for a natural stair-step in organic move towards the top side? Or do we do A, find that we've still got divergence, crash further? Do we do A and do it without any divergence at all, and whatever else, that sort of stuff. So, but these are the main sort of scenarios that we're looking at right now with regards to this parallel channel and these tops that we've got in just now. So what is the parallel channel that I'm looking at? Parallel channel, if I just I'll leave those yellow lines on there. You can see the parallel channel though dominating the screen there. Make the price action full size. Then you can see there's this purple serrated line in the middle, white line along the top, white line along the bottom. And if I just go back, how far do you think this parallel channel encapsulates in terms of price action? Because we know that there was extremes back in, say, July of 2019. We know that there was those the 2020 lows down there, which were most likely looking at this thing outside of the range of it. But how far could you really say that this has got any basis with the price action? Let's just take a look and go back the way. Well, there's our lows down there in March. We can still see it seems to have had some sort of semblance with the price. Then there's our highs in July, but we can also look back and still see that it seems to still have some relationship with the price. And in actual fact, if we just put all of that back onto the screen again so you can see it all at once, you can see that this parallel channel has in so many ways been quite a big part of the price action overall, as we see movement down through the top of the channel back there at the crash in November from 6k down 50% to the lows in December. That actually happened as it pushed through the channel, came down, found support there, and then thereafter with the movement and recovery from that point. Moving then on up the way, we came in and we found resistance, this potential head and shoulders, and then it turned support, flip resistance, flip support, etc. along the way here, and then moved up from that towards the highs in July quite dramatically, came back down. When we saw the prices crashing down below the area, they crashed right into this, found some support at the median line, resisted at the top line, support at the median line, resisted at the bottom, support again, and where we put in the inverted head and shoulders in December last year, came in for these highs in Valentine's Day. When we saw the prices crash in March, they actually crashed from the point of going through this parallel channel all the way down to the lows. When we saw them recover again in April, just before May, we saw that the big candle really pushed through the parallel channel, came back down for support again, then up here in June support, up here in August resistance, up here where we are right now potential resistance. This is why this is kind of interesting. Now, how can we relate this price action and this pattern, if you will, to the oscillators down below to give us a better handle on where we've been? Let's start off by taking a couple of lines to show us a couple of tops that we're can look at to make comparisons. Let's look between the top over here in February and the top over here in August. This yellow line demonstrates that for us, between this high and this high. And taking out the oscillators down below, you can see that if I were to do the same sort of thing with a yellow line, you can see that this actually goes towards the top side as this went towards the top side, and that is of course convergence with the price action. Now, if I were to take this off and just take this off, have I made that comparison already between those two zones? Just out of interest, by the way, that there's a distance of 185 bars between those two highs. And then if I look in here at this recent two highs and see that they're actually a lot closer as well in terms of how much you maybe would tolerate in terms of looking back the way for divergence, that's 72 bars or so between the two highs, 70 bars let's call it. And let's pop this yellow line in here to kind of show us this area versus this area and how that shapes up currently with the price action. Well, actually we see that this is actually bearishly divergent here in the 24-hour time frame, going back to that high over there on the 2nd of August. Now, this is where I actually started wanting to, this is all fair and well and everything, but this is where I want to kind of take it up a level whilst also still remaining all very simple and easy to follow along. Of course, let's make this a little bit more sophisticated, shall we? Let's talk about how things look on the weekly time frame. Now, between this area and this area on the daily time frame, we know that there's 70 bars or so. So, of course, on the weekly time frame, we'll be looking at around about 10 bars. Going back the way. So from here to over here, not a huge distance, of course, but two clear higher highs, a higher high here and a higher high over here. And that's what we see here on the RSI is in fact currently set up as a high with another high coming in thereafter. Now this could turn around and put in sort of equal sort of class B divergence, although it looks to me like there's your anchor point from the end of the last week. This current movement up the way is where we're currently putting in this week. Now if at any point in this week should we drop back down again, then of course as you can see the anchor point goes along there, and this could turn into divergence, could turn into sort of class B, or maybe even, there's the slightest chance that anyway, this could turn into divergence, right? It could if the prices were to drop down, but currently we're kind of in that position where they're not. But that's also a much smaller comparison. What if we accept that that's a valid comparison between this high and the previous high, this October and August highs on the daily chart? What's a similar comparison to be made here on the weekly chart? And I'll tell you, if you look back the way to July, you'll see that is 70 bars back here. So let's do a comparison then, which is equivalent of that August-October one on the weekly time frame. And looking over here, you can see that there's in fact bodies closing in this region here, and then of course bodies closing over here, and this is higher than it. Let's not get too carried away. Let's just take things one step at a time here and go to our previous high, which is also of course higher than the price action over there in July 2019, and look between the two areas here on the RSI. And as you can see, as we came in and put these highs in, it was in fact divergent compared to this previous high over here, except what differences did we have? Well, one of them is that between, previous highs on the price action, intermediate ones between times, we can see that there wasn't divergence there. So there's something, so that was like bullishly convergent in the face of that divergence. So there's that as a sort of mitigating factor. Also, then what we can see is that this was just not quite, this was the first instance of bearish divergence with some mitigating factors. Okay, then the price action came in and put in a higher low thereafter. Didn't actually come all the way down as far as the bottom end of the parallel channel, as we discovered a second ago looking at that thing. And we can also see that it came in and did it without putting in any sort of divergence on the lows as well on the way up here. So it was just convergent and went on up. But it didn't have hidden bullish divergence either, as it happens. It just went on up the way. So it didn't have any continuation divergence. Then we've got this next high coming in just here. And the question then, of course, becomes, well, can we do this system again that we just did, where we got a high which was divergent on the weekly time frame, but as what was convergent with its previous sort of intermediate high, and then push higher, or not? And that kind of boils down in some ways to how we see this week going really now that we're looking at, and whether or not we're able to discard the potential for divergence just here and then push on up the way, whether we get that third higher high before coming back down again, which of course is entirely possible, just as it is entirely possible for the prices to reverse here where they are now. Okay, so at this 13,200 and whatever point where we're at, or even as high as 13,500 or so, all of those areas really kind of put you within touching distance of this channel. And of course, this is more of a zone thing than it is sort of a hard, fast, and to the penny proposition. So that's the situation that we find ourselves in with regards to the potential macro divergences and whatnot. Let me just have a quick interlude here for a second to talk about trend. 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 There we go. Mixture of capital and small letters. Trend. So let's talk about trend for just a second. I think this is important for people to remember because it's easy to get confused. People have been saying, when will the bull run start? Well, let me be very clear that the bull run that we're currently in started back in March. If you were to be looking at this and trying to be reasonable from a weekly perspective, you would have to say so. Same with all of the time frame charts, to be honest with you. But let's also actually analyze this slightly differently, bearing in mind our highs that we just put in there, and say, when do you think the bull market, if you want to be sort of binary about things, started? Because that's what people are asking when they say, when's the bull market going to start? When did it start? Well, we're talking about a highly volatile asset which was trending up the way until the highs here on 2017. Then we had a bear market which lasted for a year going down the way. Then we had this low come in. What happened after this low is we had a low followed by a high, followed by a higher low, followed by a higher high. That's all we've had so far. So in many respects, you could say that this area here has been our upward trend so far. And in that sense, we've already done enough in terms of the weekly movement to have a high and come in. And so long as the prices don't go below 5,000, then really you're continuing on the bull market, which has been in place since December 2018. Okay. If you want to say that that's not been the case and that we broke that because of, just this downward movement which lasted for the guts of a year over here, then sure you can. You could say that, in which case, you're looking at the trend being since March, etc. So just wanted to have a quick interlude there. Now, what we'll do is we'll slap some moving averages on the chart just to give us a little bit more context as we're looking at this thing. There's a couple other things that I will point out as well. In fact, maybe just before the moving averages. Yeah, let's just dive down to the 4-hour time frame so I could do that little comparison I spoke about as I was looking at the highs. So what can we see here? The RSI came up, very much peaked in this area, which was over here on the 22nd. We're over here now, following on from the weekend, having had a bearishly divergent high put in on the 4-hour time frame on the weekend. So that little thing I was talking about there on the daily is certainly showing its teeth down there. What about the 12-hour? Similar situation. Obviously, that line doesn't work quite so well, but it's a similar situation there. Okay, cool. So we've ticked that part off. Now let me just show you actually while we're down on these lower time frames and the candles can be a bit more reasonably sized, what moving averages I'm going to use in today's show. And I'm just going to keep things nice and simple and use the magic numbers just for a laugh. The magic numbers for nuclear isotope stability is what I'm using in today's one. And if you're curious what they are, of course, that's 2, which I'll not use because it's two. 10, 18, 36, 54, and I'll just skip 86 as well for now and just put on these small moving averages. Now, of course, that's me having a bit of a laugh, but these numbers are pretty good for their own reasons. And in fact, if you're interested in nuclear science and all the rest of it, chemistry and whatnot, and physics and all that stuff, then go check it out. But here we have them. That is 1836.54. Wait a minute, what did I just say? 10, 18, 36, 54. Yeah, sorry. 10, that's the yellow one's 10, green one's 18, 36, 54 for the next two there. And right, what I wanted to show was that essentially this is just a selection of moving averages. These are exponential moving averages. We're above the shorter term ones. The shorter term ones themselves are above the longer term moving averages. The moving averages are all pointing towards the top side. That's all looking quite good. Early warning signs for us in terms of any sort of movements down the way come from when we see these things crossing down the way and losing their upward slope. And of course, at the minute, what we see having happened over here was a little cross, but not crossing through any more of them. Then movements towards the top side. Over here, we had a cross where actually we went down past all of them, but they didn't really manage to properly fan out the way before we saw the slope changing. So we got the position of them kind of just started to come into place here, but the slope all changed towards the top side. And then we had this little sort of confusion period. Then we went up towards the top where you can see the slope of these things being an important factor here. As we're looking at price action, you can see the slope turning around on all of these moving averages just in here as we put in this low on the 24th of September, moving towards the top side, etc., going back the way, all that sort of stuff. So what we can see right now is that things are positioned well, but if we see these things crossing over, then that of course would be kind of negative. And what we can talk about in terms of these things is just, areas of the price, and we can do that using various different factors as well, such as like the Ichimoku cloud as well, in terms of if we see price coming down towards these areas, how would it react with this rather substantial cloud area in there as well, in terms of where things could all be happening. So there's lots of different ways of looking at that. But yes, so the last thing then I wanted to talk about on this Bitcoin chart, which is of course of relevance, is the sort of slope, which is and having introduced this idea of slope and averages and whatnot, I wanted to put an idea in your head as well currently about the slope of the ADX, which is the average directional index, which is a line on the DMI indicator, which was invented back in the 1969 by a guy called J. Wells Wilder Jr. And and he's probably one of the best contributors to the modern era of technical analysis that we have. He also came up with RSI. Very much respect that guy's work. And what we see here is he came up with this fantastic indicator called the DMI, and this shows you the strength of trend having curved round down the way post the period where it crossed over them towards the top side. So we crossed over them both towards the top side. Everything was going well. Now what do we see since the 23rd of October, since just there at the start of the weekend, the price is moving, the DMI is moving towards the downside. And of course that's a slight negative thing, but we're currently positioned fairly well, with it being up above our key areas that we look at on the, and all that. So things are good, things are good. And we've managed to avoid that divergence more or less. Yeah, just avoided it there in terms of this initial thrust up with the DMI, etc. So we can envision these things have the potentials for crossing in the near future. Over here in the 24-hour time frame, then of course we see this upward slope on the DMI, and that kind of boils down to are we going up or are we turning around now? Because if we turn around now, that's convergent happily with the 4-hour DMI. If we kind of push on up a bit, that's convergent enough with what we see here. But we have got this positioned up quite high at the minute. Could it happen? And if it did happen, then we would have to be looking back over here and saying that, well, we saw the divergence on the go between these two highs as well on that DMI and the RSI at the same time while making that assessment. So, okay, right, that's how long is that? That's 18 minutes. Oh, damn. I really didn't want this video to go on for so long. I was hoping it'd be more like 10. Let's just go through the other things real quick then. That's Bitcoin for you. Here's Bitcoin on the CME charts. We don't have a gap to really be worried about here at the current time. We want to see the prices stay above 12,500. That's where we have our head of our previous head and shoulders over there. That's the 236 as well. So that's kind of your main point of consideration. We also have the potential for a cipher pattern if we were to see something turn around as well. Let's go and go. We also filled in our gap up here on the, or we didn't fill in the gap. We've moved up higher than our gap. Now we have a gap here below us. So, you know, that's that thing that I was talking about in that when I talked about Alessio Rastani and the gaps and the chances of filling gaps on either side and everything else. I explained this phenomena already back there. We're seeing it happening again and coming in at around about that moving average. If we saw a pullback, then maybe that would be our bounce area for a higher low, where we could just essentially say that it's premature to look at that divergence just yet and go on and put in more of it thereafter, having had a higher low thereafter as well, and still go up with the exact same situation that we're in right now in a couple of weeks. Ethereum versus USD. So points then that I wanted to do on this to kind of draw the difference out is that between our high and our previous high over here, we've managed to avoid doing that we've managed to avoid having any of that divergence we spoke about on Bitcoin. We can see that there's this sort of swing point area here for us to stay above just in this general region, and we're doing that so far. We're outside of the bounds of this ascending triangle, but of course we haven't had our full measured move off of it, although we have had the full measured move now at this point of the symmetrical triangle, which took us up to our 420 blaze at target. So we're happy enough to see how things go from this point onwards, you know, having already achieved that. Now, if we can find support in it around about this this magic nuclear number, number 10, exponential moving average here, and of course the top end of our ascending triangle, etc., that could be good for the prices. Looking at this $400 number and saying, well, of course, that's where you want to be finding your feet. Derivatives down below $400, not in and of themselves, obviously round number and scariness, but looking down the way, you got to say that 394 is probably the more significant area. Looking up in terms of the time frames then of this high that we have just now, of course, coming in lower or higher than our previous highs along the way. This is a more healthy looking chart in many respects than the Bitcoin one, despite the fact that we've actually not gotten a higher high over here, because of course we don't have any of that divergence, and therefore it's not going to be visible on the weekly time frame either as we make our way towards the top side. Now, of course, this does leave you with the option of coming in there divergently in the future, having put in a high in one of these areas, and of course then 470 still remains the case as being an option for the movements towards the top side, which encompass this, which include the ability to have a reversal with divergence along the way. Of course it does. Right now, looking at this sort of sideways slope on the DMI over there, thinking, looking at the chop area here in terms of the 3-day time frame makes me think, looking here at the daily time frame and seeing that while we do have strength of trend towards the top side, I've got to be somewhat judicious about this and say that we're still below 25. We haven't, crossed over the moving average yet, or the DM positive yet, or anything like that either. We've also got divergence here on the stochastics, which are also pointing towards the downside here in the 24-hour time frame. On the 2-day time frame pointing up the way, and the 3-day time frame pointing up the way, of course they are as well. And on the weekly time frame, looking, kind of like they might have found their feet, so that's decent. But when we go down the time frames, we can see that there certainly is the potential for some downward movement here when it comes to the stochastics, until we get down to the 1-hour time frame or so, where we find that we just have a confluence of these moving averages above our heads, a downward trend perhaps. But if they are looking at this as being a downward trend and looking at this low and the subsequent lows coming in here and asking questions saying, well, it's not very convincing, although it's not necessarily divergent. Well, it's not divergent. It's not convincing either. It was divergent for some times, but this most recent lows has pushed past that point, so we can say that it's not divergent. This here DMI, though, is just getting to the point where it starts to look like it wants to curve around the way, and that would fade off. And then, of course, seeing this going down the way and then prices then returning to move towards the top side is got to remind you of what we spoke about on the Bitcoin pair. And if we see movements down the way, what we're seeing at the minute is that we have, of course, this in terms of the Ethereum pairing that we're still just filling out of our descending wedge. Really disappointed with the length of this video. I hope that you found it really, really interesting so far, though. I mean, I'm sure it's good stuff, right? I'm a pacing and everything. I'm intelligent. You can understand what I'm saying, right? If you can and you're enjoying it all and everything, and you've not hit subscribe. I'd really appreciate it. I know that the vast majority of the viewers have already hit subscribe, not like every other YouTube channel out there as well. So hi to every single one of you. More than 50% of the viewers every day have subscribed already, of course. So I really would appreciate it if you shared it with your friends, I guess. So if you ever see other YouTube channels talking about how less than 50% of the people that watch it have actually hit the subscribe button, well then just know that more than half the people watching this episode at any given point already hit that button. So, I do have to be aware of that and not yap at you about hitting subscribe, but I mean, the channel's not growing very much. So anyway, but whatever. We're still inside this area. I just moved that to accommodate, to make it look a bit better. I wasn't really even thinking when I was doing it, but this kind of just draws the eyes to the point that we really need to move up past the midway point of this head and shoulders resistance area, or soon enough overall the neckline, head and shoulders neckline filled in box that we have in the background here that we've been talking about for quite a while will eventually just start lining up with the top end of the resistance of this thing, and things will start to get quite overextended and whatever else. And then, of course, if we, fill this thing out and go right to the apex of the wedge, then it's, less wedgy-tastic than it otherwise would have been, giving you the option to come in for, a 236 Fibonacci retracement. But of course, if you didn't get the full measured move off the back of that and you went for the more like the textbook thing, then you're just talking about coming back in here for more of the same as before. And of course, whenever those sorts of things happen, then you end up with a sort of channel on the charts, one way or the other, or whatever. We'll cross those bridges when we come to them. Right now, instead, we're still seeing this downward price action, but there's a potential for this to turn around. In any of these areas, I'd just be cautious about this with any movements down past 0.030, and with not trying to avoid being greedy with movements around that 0.032 area. Bear in mind that there's significant percentage movements in this area, and you can wait and see what happens for the afterwards. I think is the best way to look at that. It's going down the time frames and seeing things like, when we knew this would happen we talked about this a lot, the shaded area in the background and how we had that, but that was last week. We spoke about that, covered it already. You can see how it's only really when you get to the 24-hour time frame that you see that the negative fades away here from the DMI. Things are not looking great there. There is the potential for this wedge to sort of be the salvation. Otherwise, you're looking at having already come down past this neckline and things not being good. Need to see the prices recover the 31 before we can even start to be positive about it. Thank you so much for tuning in. Really do appreciate it. Share it with your friends, all that good stuff. And I will be back again tomorrow with more technical analysis to keep you informed of the trend. I hope that put things into perspective for you. Just, cool off on that FOMO slightly if you're getting it at the minute with regards to how things have shaped up. But of course, if we do push on past these areas, then great, okay. But we understand the context and the significance and the really importance of these points, especially from the point of view of what do you call it, equilibrium in the markets and the sorts of things that Joels Wilder Jr. would have talked about in his book in terms of pushing past certain zones with the momentum. So the momentum has certainly faded off there so far with regards to this price action, unless we push on past it, despite the fact that, of course, this looks very, very positive, right? And this is very, very positive. This is very, very positive. Okay, so I've wrapped all that up. Good, cool. Nice one. Catch you later. Thanks so much for tuning in. Really do appreciate it. My name's been Rocky Outcrop. Share with your friends. Good stuff. See ya.